Welcome back to Parent Squad, and today we are talking money. So April is Financial Literacy Month, making it the perfect time to have those all-important money conversations with your kids. Not sure where to start? We can help. Here today is Everwise Credit Union Central Indiana Area Manager, Amy Wells. Amy, thank you for being here.
Thank you for having me.
Yeah, this is an important topic because a lot of us, we get our financial literacy. We're taught that from our parents. And so it is an important job because we want our children to be financially healthy when the time comes. So it's important to start while they're young. Why is it?
It is. It's very important to start while they're young. That's when they're most impressionable. Starting to teach your kids about making financial decisions when they're young is really critical to making them feel better about their finances in the future.
Because it's also so much emotion that's tied with money. It's so much that's psychologically tied with money, in addition to the actual education and the actual tangible lessons that you can teach in terms of how to budget and basic accounting, et cetera, et cetera. So as parents, we don't feel like financial experts in our own lives. How can we still lead those conversations with kids?
Yeah, you don't have to be a financial expert in your own life. You just have to be open and willing to have the conversations with your kids, starting when they're young and continuously having those conversations as they get older, because it's not a one and done conversation. You can't teach them everything at one time. It's taking them through day by day and helping them understand those decisions.
So what are some ways to talk about money at different ages?
Yeah, so when kids are younger, really just kind of having them take a look at what they're spending or what they're asking for and how much it costs, talking to them about budgeting, modeling the behavior. And then as they get a little bit older and start getting some money either through birthdays or Christmas or dog sitting for the neighbors, dogs, helping them to start making decisions on how to use that money and not just spend it all. And then as they get into high school and start getting summer jobs, teaching them how to make decisions with that money and making it last, but still making it fun. One of the things that you can do as a parent is take your kids to the grocery store and take them shopping and have them realize how much the price is for each of the ingredients and how that goes into their budget every day, and then having a meal and talking more about how much did this meal cost, how much did it take us to make it, and really tying it into some everyday things.
I love that, just because so often we're moving so fast, and so to stop and kind of have the conversation with your children about what transaction is happening here is a big deal. And we're all using our cards so much, or credit cards or debit cards so much. They're not seeing the actual money exchanged to be able to get a visual picture of what's happening and how it's being done.
Right, absolutely. And that does, you're right, make it even more important, because used to when we spent cash and the kids would get the change and they would understand what change meant.
Right.
You know, how much they got to play with it and touch it and really understand it a little bit more.
Say thank you to the cashier. There was a receipt. Maybe you get one today, maybe you don't. So I love the family meals idea. We also know that money can be a stressful topic. So how can we keep it comfortable with the kids? I'm sure we all have like a money story from our parents that might not be so positive. How can we keep it positive?
Really
or
just
comfortable, I should say.
Yeah, like I said before, just really making sure that it's a continuous conversation. Everything that we do, everything we use, requires money, and having a conversation with the kids when it's not a stressful time. Small examples, modeling the behavior, balancing your account, looking at it at least to understand what you have coming in, what you have going out, and them seeing you do that is going to help make it more comfortable every single day.
Because I think a lot of parents want to shield their children from financial stress, but at the same time, you still want to be open enough to teach them about what's going on and how to get through tough moments, I think, and that comes with a little bit of transparency. When do you think, on another topic, when do you think it's a good idea to consider getting a bank account?
When they start getting some money, like a lot of parents start savings accounts for their kids when they're very young. And that's a good idea. We need to have savings accounts and start saving for as expensive as college is, and saving for maybe a car and the things that they're going to need when they get older. But when they're old enough and they start getting money from, like I said, before birthdays or for Christmas or even doing little side jobs, then open up an account, have them decide how much are we going to save, how much are you going to keep to spend, and then how much are you going to put into this account and to be able to use your card.
Okay, don't forget about your 10%.
That's right.
All right, let's talk about when the kids get older, and then they have jobs. You kind of touched on it just a little bit, but obviously the conversation looks different between a 5-year-old, 10-year-old versus a 16-year-old who's going to be out the house soon.
Right.
What are some conversations you think should be happening there?
I think when they get a little bit older, that's really some time to start talking a little bit about credit, helping them understand interest, helping them understand fees, and what things are actually going to cost as you get into adult age and you become
Right.
independent. But continuously talking about the savings aspect, saving for, choosing small short-term goals to save for, celebrating successes as they go along and are making progress to those goals, and then celebrating when they achieve those goals.
Okay, and you touched on it just now when you talked about credit and debt. When do you think is a good time to start that conversation or have that conversation? Obviously, 16, 17, 18, they're about to be at the house in a second.
Right,
So,
yeah.
but is that too late or should we do it earlier?
I think that around that time is good. 16, 17, when they have a job, they can start understanding what they want a car, right? They're going to have to start paying for gas, helping them understand what's going to be included in that gas and the insurance and maybe the car payment and the interest that you pay and the maintenance. They need to understand those types of things when they're getting to be that age so that they're even more prepared when they do leave the house.
Okay, anything else you want to add? I think we covered it.
Yeah, I think we did. I think just making sure to continuously have those conversations every day with your kids, making it comfortable, making it a habit so that they're confident and they don't struggle when they leave home and have to make those decisions themselves.
Absolutely. We want to set our kids up for success. Thank you for being here.
Yeah, thank you so much.
Great things to consider there. We have more on Everwise at WTHR.com/Parent Squad. And still ahead, we're talking sustainable swaps with the City Moms.